traders, welcome to the TMT Stock Market Strategy video for Thursday, February 16th. We did get another day. The markets have melted up yet again, coming off of the election lows to now absolutely insane the way the markets are working. However, that is what the market gives us, and we as traders have to change, adapt, or sit on the sidelines. Whatever makes you feel comfortable based on your trading plan. I see that the market is carving out a top, and I'm not ready to call a market top just yet. And remember, I painted out two scenarios that we would either sell off based on our data and the Humphrey Hawkins meeting with Janet Yellen, which concluded today, and we haven't gotten a sell-off as of yet. So that means one of two things: either the market sell off today or tomorrow, or early part of next week. You know, and remember, we do have the monthly expiration this week, which is usually bullish. So after the monthly expiration, either we get the sell-off and we pop after that sell-off, and that'll be the top, or the markets just continue to melt up until their point of no return once that market is extremely stretched, which it is already, guys. It could happen at any given moment. It could happen this morning. It could happen, the market just turn around and we hit sell programs. And that, once the sell program hits, then the algorithms and the HFTs come in, and then that fuels the fire, and then you get really starting to get some panic selling. Remember, the markets are made to fool the masses. So if you guys are long on swing trades or you're a long-term investor, please do not put capital to work at these levels. The markets will come in. There's no two ways about it. The problem or the time is the constraint here. When is it going to happen? I think we're very close. I'm going to show you some indicators tonight. The first thing is the VIX. VIX had a very nice day today, even when the markets are up. And you know why? Well, we have money managers now who can only really buy funds, buy stocks within their fund, are now starting to creep up a little fear, meaning that the markets definitely have gotten ahead of themselves. And remember, the market is rallying based on the assumption of what Donald Trump's campaign promises are. Do you know what kind of laws, any type of promises that he made has to go into effect through Congress? You're talking months and months, maybe even years. And then even his tax plan that said that he's coming out with the announcement. That's where I mentioned to you, and I'll show that to you in the chart, the timeline chart that we looked at. We're going to continue to monitor. That's something that could happen. Maybe the market tops somewhere the first, the second, or third week of March after his tax plan. What happens if the market doesn't like one little bit, one thing of what he's going to say? Is the market going to just fall apart? I mean, it really could, because there is no technically support. Now, there's tons of technical support, but technically speaking, there's no one to bid the market up. Okay, we still have the Dodd-Frank Act still implemented. That hasn't gone away. Okay, so you know, once you get those algorithms and HFTs really start to get going, it's going to be a free-for-all. And I'm telling you, we are fully one-sided, loaded the boat long. Everybody is long, so just be careful out there. Okay. Next is going to be the McClellan oscillator. Now, I haven't showed this to you in a while. Why? Because look at all of 2016. Other than the first week of January, we've gotten really nowhere. Okay, nowhere. No outside of the band, and then we went sideways. So I haven't even showed this to you because it makes no sense to show it to you. But right now, we are out of the band. Okay, we're getting out of the band here. That tells me, and I'd like to see it out of the band, meaning above 70. To really get an overbought signal. But right now we're out of the band, but not in an overbought state. But we are getting into some washout levels of the S&P 500 stocks above the 50-day moving average. We had a reading of 76%, almost 77%. That to me is close enough that the markets are actually, remember, 77% of all stocks in the S&P 500 are above the 50-day moving average. That's ridiculous. Remember, we could go even higher, as you can see. So just keep an eye out things. That's why I just want to show you, to educate you guys. NASDAQ stocks above the 50-day moving average, 85%. So we are in washout levels here, meaning extremes, if you will. Go right to the indexes. We have the UUP Dollar came in nicely, popped real nicely in the pre-market, and then rolled back down again. So long as it holds this uptrend line, the dollar should be in good shape here. Okay, but again, we need to monitor it very closely. Okay, and that's going to affect obviously gold and crude oil prices. Gold had a great day today. Had a nice day, GLD, and this looks like this move might be here to stay. Maybe this is not corrective. We did get the higher low from this previous low, and now we have another higher low from these two lows. So this may not be corrective. And remember, this is off of the premium video, guys. This is when we show you levels, intraday levels to trade off of. Here's the GDX, and again, you can see that inverted head and shoulders. Nice pattern, and it's holding true here. This is what you want to see, guys. You want to see this, and anytime you have an inverted head and shoulders, you want to see that back test into a bull flag pattern, which is a bullish pattern, into the neckline. I mean, you can't get any better. It's classic. And if we break out of this bull flag pattern, then we're going to go look for the head and shoulders. And let me show you what this small little head and shoulders, where it represents. So you just take that and you move that up, and we get to challenge the highs. That's going to be the target right here, the highs, challenging the highs. And this is something that we're going to watch, because if it does break out, there's no reason not to take a long trade in GDX. TLT breaking down here. It looks like this. Cup and handle is probably going to be a bust. All right, not yet, but I do think that that this looks like it's going to be a bust here. So we're going to keep an eye on this, and remember the USB weekly sitting on the weekly 200-week moving average. If that's lost, I think bonds are going to get hammered. All right, keep an eye on that. Next, let's take a look at the crazy indexes. We have the S&P 500. You could see here, based on our TMT Premium Pro Trader Premier video, you could see here we have our levels. But the reason why I say, why would you buy stocks that are just about almost 10 points away from the 21 EMA? That's crazy. And then you have 5 points away from the 8. I mean, that is just crazy to even do something like that. So look at the volume, below average volume. So this move, I'm definitely treating this as suspect, and this is going to be the fifth leg up, that capitulatory top that we're looking for. Now remember, if we get the pullback should hold the 21 EMA, and then we should have one more rocket up where everybody gets long. The shorts, the permanent bears, throw in the towel, squeeze that market even higher to 24, to 240, 238, 240. This is the timeline clock here we're looking at. And we should bounce back around. Even if we come back in a little bit, we should ride that right up to around 238, 240. That's going to be the ultimate target if, in fact, we start the rollover and we start the corrective phase. Now, if we don't, if we roll back and we make a higher low from here, then I think we're going to go even higher. Okay, but if we do get a corrective phase and that turns into a full-blown pullback, that's we should hold that 229, 230 area. And if it is breached and broken and closed below, two closing daily bars below, then I think you could pretty much solidify the top is in. Here's that fifth wave on a 60-minute chart, another view to show you guys. IWM did break out, okay, has not made a new high, but did break out of this bull flag pattern here, as you can see. And you can see here, these are the TMT Pro Trader Premier video, the levels, guys. So, and if we do lose this 135 again, okay, we should get a flush all the way back down to these levels. Transport's really not doing too much, but we did pop above it, so that's also another breakout. I believe the Dow, the Nasdaq, and the S&P made new highs again. And look how silly this move is. Way below average. Markets moving higher. Stocks, Nasdaq stocks above the 50-day moving average at 85%. Guys, if this is not a recipe for disaster, I don't know what is. Be very careful out there. Remember, day trading is a little different. Absolutely follow the trend. The trend is your friend when you're day trading. You only have 6.5 hours a day to make money. Or step aside. If the market's a little too rich and the market's not giving us a proper entry based on your trading plan, step aside. Doesn't mean that you can't wait till tomorrow. Believe me, it's worth it. You don't want to take a large hit detrimental to your trading account. Have a great day. Let's see what happens today, guys. It's going to be very, very interesting. Take care, guys.